Our final presenter will be Marco Mangelsdorf, co-founder of the Hawaii Island Energy Cooperative and owner of Provision Solar Incorporated on the island of Hawaii. His presentation will focus on the lessons learned in trying to create an electric utility cooperative on the Big Island. So let's give a big hand for Marco.
Oh, good afternoon, everybody. It's nice to play cleanup here. I wanted to first thank the Academy for, no, wrong speech. Sincerely, to thank everybody at Maui Energy and everybody at the MAC, everybody here on stage, Frank, who was the mover and shaker behind this particular panel, and everybody behind the stage, side of the stage, in the foyer, out in the courtyard, who put in a lot of time and effort, months and months of planning and work to make this happen. So my sincere gratitude for everybody who did that. So I'm here in about 10 minutes to give you a really condensed version, quick, down and dirty, but hopefully interesting version of life in the interesting energy co-op lane. And I've had some experience doing that now over the past 1+ year. So let me get into it here. Energy co-ops go back to essentially the Rural Electrification Act of 1937 under FDR. And why did this act take place to begin with? It took place because you had IOUs, investor-owned utilities, that were not interested in extending lines and serving communities in the heartland of America because it just wasn't cost effective for them. They weren't going to sell enough power. So this generated the formation of energy co-ops, and right now, just to show you that it's not some relic of the Depression era, there are approximately 900 electric and energy co-ops across the United States. So it's certainly not a relic of the past, and in fact, over the past 25 years, there have been over 20 new co-ops that have formed across the United States, including, of course, our very own Kauai Island Utility Co-op, which came into being in 2002. What is it that differentiates co-ops from other utility-owned models? A number of the most important points, I think, include there's local democratic ownership and control of the utility company that is directly accountable to the ratepayer/members. This puts it in contrast to an investor-owned utility where you have a natural tension essentially between the ratepayer members and shareholders. That is not the case with the cooperative. There's a lesser tax burden for a cooperative. Cooperatives are not for profit. The profit, in fact, if you will, which is actually considered the margin above operating expenses, actually goes to paying down original debt, and it goes back to the members. Every single year since KIUC has been in existence, they have provided a dividend or disbursement check to its members. We're not talking enough to go to Europe, perhaps, but still, nonetheless, the money goes back to the members. Co-ops here in Hawaii, energy co-ops, have a little bit less regulation from the Public Utilities Commission. They're not completely independent, but based on an act that was passed, if I'm not mistaken, back in 2013 called Act 57, co-ops have more independence compared to investor-owned utility companies. Another chief difference between a cooperative, an energy cooperative, and investor-owned utility is that typically co-ops try to do the very most that they can with a minimum amount of spending. They're not trying to necessarily pad a rate case, and I'm not accusing the current Hawaiian electric companies of doing that by any means, but there's a different economic philosophy with co-ops compared to IOUs typically, in terms of how much can we do, what's the best we can do with the minimum amount spent to go where we need to go. So, I am the spokesperson, one of the directors of the Hawaii Island Energy Co-op on the Big Island, and why did we come into being? We came into being because December of 2014, there was the announcement that Hawaiian Electric Industries was entering into a merger agreement with NextEra Energy in Florida. And this caused a number of us on the Big Island to look at the possibility of essentially getting a seat at the table on this particular docket before the Hawaii Public Utilities Commission to make the case or try to educate people about the possibilities of a cooperative on the Big Island. So that's really the genesis. It's not often that you have the ownership and the control of one of the biggest, if not the biggest, corporations in the state of Hawaii up for grabs, as we have had since the merger announcement took place on December 3rd of 2014. So that was really kind of the genesis of why we're doing what we're doing. We are an official 421c, according to Hawaii revised statutes. We are applying for 501c12 status, which is a form of nonprofit that is specific to energy co-ops. We are one of 29, or at least original interveners on the merger docket. Now we're down to 24, and we're waiting, as everybody else is, to see how this merger plays out, whether it's going to get the thumbs up or thumbs down from the Hawaii Public Utilities Commission. And officially, ladies and gentlemen, HIEC is neither for nor against this merger of NextEra and HEI. Some of the challenges of co-ops, they're multiple, and number one, you need people. You need people. You need individuals who have a passion, who have an enthusiasm, and who have a commitment to donate substantial amounts of their time, all for no compensation, no direct pay. And that commitment, if we are successful, ultimately, if we were to be successful, that commitment is not just a few weeks, it's not just a few months, it is as long as a year or two in order to establish a fully functional energy cooperative on the Big Island. You can't do much, even if you have great people, unless you have money. And while I'm not at liberty to share exactly how much we've raised and how much we've spent, I can tell you it's well into the six figures. Well into the six figures in order to be a credible player, make a credible case, educate the public as best we can so far. And fortunate we've had benefactors and contributors who find our cause valuable and noble, and we've been able to take advantage of that and go a long ways really with what we have received. And again, nobody has received any compensation whatsoever. Along with money and people, you need to have a thick skin, because regardless of how good, how noble, how valuable you think your cause is, you will have people challenging you. You will have people attacking you and criticizing you that you're doing it for your own narrow self-interest. So you've got to have a thick skin in order to take that on. And last, but certainly not least, you need a willing seller. A willing seller of, in this case, Hawaii Electric Light Company, which right now there is no willing seller, and we're very well aware of that. So you need to be able to take what you do, hopefully generate in terms of support, in terms of enough monetary support to be able to play the game at a credible level, and you also need to educate people. You need to be able to hold listening sessions. I have spoken to so many various service organizations. I've spoken to classes at schools, and I've barely scratched the surface in the Big Island. We've barely scratched the surface, but you need to start somewhere. You need to start letting people know who you are, what a co-op is, what the possible benefits are. Having a PR firm helps a lot too, because these folks know the ropes, and they're indispensable. You need a good law firm who's able to keep you abreast of how to do it right, how to do it legally, how to do it in the most credible way fashion. A professional website is also important. We all spend a fair amount of time in cyberspace, and having a website that looks professional, is clear, educates people well, is really important. What do people care the most about, regardless of who or what ownership model you have as far as an electric utility? I think it's really, really clear. They care about the power staying on 99.9986% of the time, if not 100%. They care about the power being on. They care about their bills being as low as possible. I'm very cognizant of those two primary priorities. And whether it's a co-op, a muni, an IOU, that has to be paramount, I think. And I think this particular commission, and under Chairman Mina Morita prior to Randy Iwase, has made it clear as well that in terms of the primary goal of utility companies is to achieve those two goals, as well as trying to bring on as much as possible, as quickly as possible, cost-effective renewable energy. Not renewable energy at all costs, as to some extent we've had prior to the past couple years, but cost-effective renewable energy that benefits all ratepayers, and not simply a smaller subset that is able to take advantage of net energy metering or other incentivized programs. And to wrap up, I'm under no delusion that no matter how great I think or how noteworthy, how beneficial a co-op model is, that ultimately, sadly, it's kind of a reflection on our own society that you have a very low level of participation in public decisions, whether it's voting or in the case even in terms of choosing duly elected, democratically elected board members for KIUC. They just had an election last week. They have 9 board members. Every year there's a rotation of 3 board members that are up for re-election. And out of 25,600 ballots for KIUC, 25,604 theoretical votes, only about 15% of the electorate of those 25,604, less than 15% actually voted. So no matter how great I think and how exciting the co-op model is, it's still we're seeing not enough to generate much more participation than typically you see in a standard election. Finally, just several points here regarding what I see as Maui-specific challenges. If there were to be people here in the county of Maui who are interested in the co-op model, because I've been contacted from time to time over the past year. Gee, I'm talking to people over here. We'd like to try to replicate what you're doing. How have you been doing it? How can we move forward? How can we try to do something similar on this island? And I tell them, well, I'm happy to talk to you as much as I can, but I see several points here that would give me cause for pause. One is that there's possible competition from the county of Maui that has seriously looked into a municipal utility here. And I hearken back in the late 1990s on Kauai, where you had then Mayor Jan Kusaka, if I remember her name correctly, who was interested in having a muni on Kauai. Well, this is about the same time when Kauai Electric was up for sale, and that was the genesis of KIUC, Kauai Island Utility Co-op. So there was actually not much aloha between KIUC and the county of Kauai, because they were both going after the same thing. So if that were to be the case, if it were to be the case here on Maui, where you had both a cooperative effort that sought to turn what Maui Electric has here into a co-op, and you had the county of Maui doing the same thing, that could be a challenge to say the least. There's also the challenge, of course, that Maui County is not one island, not 2 islands, but 3 islands. So I think that makes the challenge of having a single co-op on 3 islands more difficult, more daunting than simply one island. And finally, I'll go back to what I said a few minutes ago. You ain't got nothing unless you have a willing seller. A co-op does not have the power of condemnation. We don't have the power of eminent domain. We cannot do a power play to cause HECO, HEI to sell, whether it's Helco or whether it's a Maui Electric here. So it all will come down to if we have the opportunity to turn Hawaii Electric Light Company into a cooperative, it's because the folks at HEI will have determined that it's in their best interest to do so, not because of pounding them over the head or trying to have some grassroots campaign which is going to scorch their feet and force them to do so. So thank you very much for your time, and this is it's a really exciting subject, and we live in such incredible, interesting energy times now, where there's so much at stake on the political level, social level, regulatory level, utility level, that I've never experienced such a multi-dimensional chessboard as we are playing on now. Any and all of you who are interested in energy, whether it's people like me in the trenches, folks who are covering it in the media, the financiers, I mean, it's just so incredibly enriching, and I'm really pleased to have had the chance to be a part of this group, speak to you, and to be a part of this incredible challenge, but also a very exciting time we're living in. So thank you very much.
Okay, so why don't we start off by having Doug, Kelly, and Jennifer. Do you have any observations or questions for Marco or Jonathan or Jamie based on their presentations. Let's get started that way.
I'm sure I do. I guess a couple of questions. Marco, when you talk to people about potential benefits of a co-op on the Big Island, what are you saying in terms of rates and bills? I understand you're being careful, but what generally are you able to tell people?
No, that's a great question, Doug, and it's one that I have to answer very carefully, because as much as I would like to say, well, a co-op can drop your bill, your average bill, by X dollars a month or X dollars a year, that would be, number one, would be rather speculative on my part to go into exact numbers. And you want to, whatever you put out there, you want to have it be defensible, not just the next day when the media covers it, but in the next 6 months, next year, next 2 years. So I'm not comfortable, we're not comfortable in giving specifics in terms of the average bill is going to drop by X. But when you look at the overall equation of a co-op and the fact that it has access to lower cost capital, that its margins are slimmer, it doesn't have a responsibility to shareholders that may be far and wide, that one can make the case that a cooperative, not in every case, but if you do a side-by-side comparison of co-ops for, let's say, IOUs, that it's entirely not just possible, but plausible that the rates would be lower under a cooperative.
And one last question, then I'm going to turn this over, but in your willingness to seek lower costs, any concerns about using fossil fuel? I mean, if that appears to be your lowest cost option at the time for your co-op, is that a path you're willing to go down?
I think it really depends on, you're balancing what you're trying to do in the short term in terms of energy savings, therefore lower utility bills, and trying to take advantage of the very low cost of fossil fuels right now. What can be done in fairly short order without massive infrastructure costs? And one of the things that we've looked at, as well as with our friends at KIUC, is the possibility perhaps of using propane. Propane as a fuel substitute, if it makes sense, not to go necessarily from one fossil fuel to another, although that's what we would be doing, but in the short term, if it financially makes sense to be able to bring costs down to the ratepayers, that's something certainly worth looking at, especially, again, if you don't need substantial infrastructure investments to do so.
Okay, I guess I'll go next. That kind of worries me, because you're right, it is going from one fossil fuel to another, so I'm not sure what the accomplishment would be, but I guess my question for all of you as far as renewables go is, what is your priority in looking at renewables for your models of utility? Is it price? Is it community benefit? Is it environmental? Is it energy security? Because, especially for our island, because we can make energy locally, whereas, petroleum, obviously, we're importing that. So what is the first thing, what is the first priority in choosing renewables or not choosing renewables?
I think I can address some of that. I think it's all of those things, really. I think as a regulated utility, our primary concern right off the bat is always cost. Is it economically feasible to do the project? But I think all the things that you mentioned, like energy security, resiliency, the stability of the companies that are providing it, I think those are all really important factors in evaluating projects. But I think based on, a conversation that we had at lunch, there are, I think, increasingly utilities need to take a look at the other dynamics, the sustainability dynamics, the local jobs, and the impact it has on the local economy, and just take it off the balance sheet a little bit more. But absolutely, all the things that you mentioned are definitely part of the utility and the analytical paradigm that we use to evaluate renewable energy projects.
So the backstop, I think, is quite different in Colorado than it is in Hawaii. That's obvious. But let me give you some context to that. So in Colorado, close to 99% of our energy comes from fossil fuels. Now that's, again, thinking about the transport, that's our natural gas for heating and industrial processing and electricity. So what started our effort was truly from an environmental standpoint, which is how do we as a community start to take control and responsibility for the fact that we play a big part in our state's emissions. Now, that evolved pretty quickly when we realized that there was a pretty strong economic argument to be made. You heard Bill Ritter say yesterday in his comments that just this year, it is cheaper to build new wind in Colorado than for the utility to provide grid power. So circumstances have changed, those lines have crossed. And so for us, suddenly it was, wait a minute, if we want to stabilize our long-term economic system and really think about how that translates to ratepayers, this is not only an environmental argument, this is an economic argument. And then I would just add the last piece of that, which is, as you start to unpack a renewable portfolio, how should you dissect that up in terms of large-scale utility invested renewables, whether it be wind on the eastern plains of Colorado or large-scale solar, still single points of failure, still large projects that are just projects that are selling kilowatt hours versus those that are based locally on rooftops in neighborhoods that are strictly benefiting the customer. So we've made that distinction as well.
Okay, can I just, did the business community kind of start in favor, opposed to this? I mean, I'm assuming the environmental community was in favor from the beginning, but can you just talk, I mean, where does the business community in Boulder stand, and do they see this in a positive way?
You really going to ask me that, Doug?
I really am.
No, this is interesting. It goes back to the point that I made about risk equaling change. So we have some large industry in Boulder. We have IBM's largest green data center in the world. We have Ball Aerospace, the federal labs, NCAR, NIST, and NOAA, CU Boulder, the university, 25,000 students. So for the majority of them, they say, well, if it's not broken, why do we need to do anything different? And it takes a lot to, again, unpack the benefits and show them the long view to say, understand where you're coming from, but let's talk about the trajectory in terms of rates. And it's always incumbent on us to say there is risk in both cases. There is risk staying with the incumbent utility, and there is risk with municipalization. It's just how you evaluate that risk. And so I think we've been able to make a pretty compelling case with the business sector to say, if reliability and rates are your top and utmost concerns, which they should be, a local utility is certainly going to align with those values.
Do you think going to the municipality gives you more control to integrate renewables?
Absolutely. No, absolutely. And I will just kind of point to that last comment I made about our utility, Xcel Energy. They talk about renewables in this way. Renewables or solar done responsibly is a 5-megawatt solar facility that's 200 miles from Boulder. How does that benefit the customers? They're just buying kilowatt hours. When we say we really want to see solar on rooftops, and we've talked about it quite a bit in terms of the attack on net metering and the policies that enable customers to do what they want to do and to engage our local businesses in innovation. So what we have said is, no, in fact, if we think about the values that we have as a community, a local utility has the ability to be very nimble and flexible to really align with those values.
Can you speak, both of you, actually speak to the amount of time and the process it would take to transition to either of those models? And the cost involved, too, for the transition?
Sure. Let me address Kelly's question first. Give you a quick kind of tutorial about electricity production for Hawaii Electric Light Company. They were almost 50% renewable in 2015. Almost 50%. And they actually hit a peak of 68+% in December. So they are well on the way as far as they're far beyond the benchmarks for 2015. And we actually performed an analysis, the co-op has, and we see a path to 97-98% renewable within 14 years, not within 29 years, 14 years. That's not with geothermal. That's no geothermal. That geothermal, by the way, on our island, I mean, that's the biggest renewable energy source on the Big Island, and it is a very sensitive issue. It is very controversial with a number of parties, and it would be irresponsible for anybody at this point involved with the co-op to, let's say, we're pro-geothermal, let's do it more, or we're anti-geothermal. That's ultimately a decision that would be made by the members, the ratepayers of the Big Island. But I think there can be a natural tension between what's cheapest and what's best in terms of renewable energy. And I think up until a couple, 3 years ago, the philosophy in the state, when you look at the incentives, net energy metering, tax credits, feed-in tariff, that it skewed on the side of renewables at all costs, or high cost, compared to cost-effective renewables. I fully support the PUC's decision back in October to end net energy metering, and that is counter to my business interests, but it's for the best of the community, it's for the best of the state. So we have to move to a place where it's not renewables at all costs, it's renewables that are cost effective. And I believe that there is this beginning over the past couple of years or so, this realization that that's really where we have to go. But I mean, again, to go back to the Big Island, if we take, let's say, the geothermal option for more geothermal off the table, okay, well, do we take that off the table? If we take biomass like Huhonua, which was a biomass plant that had been in the pipeline for several years, that's been taken off the table for now. We keep on eliminating various options, then we start to kind of back ourselves into a corner. Okay, what are we going to do? We want more renewables, we want more cost-effective renewables, we want more independence, we want lower utility bills, that's all great. But there can be some inherent tension between these conflicting priorities. So in terms of the cost, as far as establishing a bona fide cooperative, again, assuming a willing seller, I mean, it's in the range of millions. Because if and when we were to have a willing seller, or if there were to be a willing seller of Maui Electric to a co-op here, hypothetically, you would have to open a docket. There would be a docket opened before the Public Utilities Commission. There may not necessarily be 29 interveners for such a docket, but there would be a lot. And that would go on for months and months and months. And legal bills, information requests, cross-examination, so forth and so on. So it's a lot of money, and there's a lot of effort of very few people who are actually going to be paid to do so in terms of actual HIUC staff or Maui co-op staff. You got to pay the consultants, you got to pay the lawyers, you got to do legal, but in terms of having high-paid executives taking home big salaries to establish a co-op, that's not likely to happen.
How many years did it take Kauai?
How many years did it? Well, that regulatory decision, when it actually, let me take a step back. Citizens Corporation out of the East Coast, they owned Kauai Electric for decades. They wanted out. They put Kauai Electric up for sale. There was a bidding process, request for proposals, or for bids. And the winner was KIUC. They bid the most, $270 million, 270. And that went before the commission, and the commission turned it down. Turned it down because they said it was too high. It was going to be too much of a debt burden on the KIUC members. So they went back to the drawing board, recalculated the numbers, submitted a bid to citizens for 215, reduction to $55 million, and that was accepted by the commission as being reasonable and not an overbearing burden on new KIUC members. So people ask me sometimes, what do you think Helco's worth? Well, I mean, ultimately, if it were to come to that, it would be fair market value between a willing seller and a willing buyer, right? And we don't have that. That said, at a forum that I attended last year with my friend Jeff Ono there in the audience, he opined that the net asset value, net book value of Helco was somewhere in the $700+ million range. So if Jeff said it, I put a lot of credence into that because I think very highly of Jeff.
Curious to hear from Jonathan as well on that process.
Well, I wanted to start by amplifying a point that Marco made, which I really liked, which is this concept of clean energy at all costs. And I think there was a notion that in Boulder that was really the driver. And I think, in fact, it was an argument that our utility perpetuated, which is your rates are going to go up, your reliability is going to suck, and they're saying, you know, your lights are going to go on, your beer is going to be warm. And so, wow, it was very dramatic. So, you know, thinking about This concept that you raised about a willing seller. Well, again, through municipalization, it's using eminent domain to essentially condemn and acquire the system. So we have to go through two big legal arguments, actually three big legal arguments. First is getting the authority to separate from the system, and that's where we are now, really kind of snarled up at our PUC. Because, you know, Excel is not a willing seller. In fact, they're fighting us tooth and nail. I mean, it's because it's the precedent that it might set. So our appraisals then are that we would have to buy the system for roughly anywhere between $150 and $170 million. Now, just so you understand the scale, Boulder's 25 square miles, about 105,000 people, peak load of about 235 megawatts. So to buy the distribution system, and I want to emphasize that that's not generation assets, that is just substations down to the meters. But if you think about how you then fund that, again, municipalities do have access to cheap money, and so you have to look at your taxable and non-taxable bonding capacity and how you would actually pay for that. And if you amortize that debt over a 20 or 30-year period, it's pretty insignificant, quite honestly. And so we have safeguards built into our charter that say we cannot move forward. We simply cannot move forward if our rates are going to be more expensive than they are on day one from the incumbent utility. We have to show that reliability will increase, that our emissions will go down, and we have a plan to increase renewables and a debt service coverage ratio of at least 1.5. And so there are safeguards, and we've actually put a cap on the acquisition of the assets at $214 million, so we cannot go forward. The last piece is the stranded cost issue, which is dealt by with FERC. So that's not something that happens at the state level. And we've determined that the assets are fully depreciated in some sense, and if we develop a plan to effectively reduce our purchase of power commensurate with the resource need that is published by the utility, in other words, we wean off as they show a resource growth, and we do that in a way that makes the most sense for all ratepayers, we believe there will be no stranded cost.
So just to follow up on Jennifer's question, how long have you been at this, and how much longer do you anticipate?
Oh, I love this. This is great. I mean, well, it feels like an awful long time, but change is really hard, and this is a big deal. So we started, I was fortunate or unfortunate enough to start the negotiations in 2007 as we began to think about how our franchise was coming to an end and how we might position Xcel Energy and Boulder as the new partnership model that they could deploy to all of the customers. So we are trying to kind of forecast where they would need to go. Our municipalization effort really started in earnest in 2010, so we are moving into the 6th year. Takes time.
Yep. Yeah, go ahead.
I'd like to expand on a concept that Jonathan brought forth, and especially using the wonderful lens from the mainland that you have this gigantic corporate entity, Xcel, and that the Muni is trying to extract itself from that and establish itself and gain that local control. But I think if you use the local lens here, it doesn't get any more local than Maui Electric. It really doesn't. I mean, you can go down and pay your bill in person. I remember when I lived on Nantucket Island off of Massachusetts for 9 years before I moved to Maui. And I was there when we saw Nantucket Electric, which was literally our local utility, fall into the hands of National Grid. And you used to be able to go down and pay your bill in pennies and talk to Nancy behind the counter and all that kind of stuff. And then one day there was just a sign on the door, call 1-800, we're not here anymore. And I don't see that happening here, even with the merger with NextEra. I see us maintaining that local identity. And Hawaiian Electric and Hawaiian Electric Light are just as much tied to their local communities as we are. And I think that's one of the things that makes us so unique. And I think it's one of the things that makes us so strong, is our ties in the community. And everybody is this big ohana, you know? And I just wanted to mention that because you do bring up a good concept that in that context on the mainland, that is wrestling local control from a big entity, but we already are local. So I just wanted to mention that about our operation here.
I just wanted to move the conversation. Now, we've asked a lot of questions, but do you see any red flags in what you're hearing, or is there anything that you're kind of forming? I'm talking to Kelly and Jennifer and Doug. I mean, what you're hearing right now is a lot of information. You've asked a lot of questions. What kind of ideas are kind of swimming in your head right now, or what kind of conclusions are you making from what you're hearing?
Well, actually, it leads to another question. I think it's a really important question that I wanted to ask of all the panelists. In your models, should the utility be allowed to generate its own energy? Meaning, should the utility own the solar panels or make the biofuel or own the wind farms? And why or why not? Do you believe that? Because I really like you to speak to the procurement process and what that does to the actual rate. If the utility is set up to bid on fuel, say, or put out a bid for fuel, put out a bid for solar energy, the solar farms that are recently closed down on Oahu, in favor and decided not to do that in favor of making its own energy, what's the risk to the ratepayer of not having that bid process?
Personally, Kelly, I'm ownership agnostic in terms of generation. I think it has to be what's in the best interest of the ratepayers, who could do it cheaper, and just take it from there. Really, I'm not necessarily a believer that utilities must divest themselves of any and all generation and strictly go to transmission distribution, nor do I necessarily believe that they should go in the other direction. I think it's really site-specific and what makes the most sense for these individual localities, at least for the Big Island.
Right, but we went through a period a few years ago where the utility here was going to import 100 million gallons of palm oil from Indonesia, make its own fuel, and is that appropriate? Will that be the cheapest rate? Will you not know, because now all of a sudden there's no RFP out for the price of fuel? So that's kind of what I'm getting at, is that, that can happen in all types of local energy production. It can happen in solar and wind and whatever else we're doing. If the utility steps in and decides to create that energy itself, are you not going to get the bid process that brings the best price to the ratepayer? That's kind of what I wanted you guys to address, is what is your opinion on that?
Well, I'm going to answer this completely indirectly. So.
Okay.
And I'm going to say it like this. As we've evolved our thinking, there are a couple of key words that really resonate within our community, and it's flexibility, nimbleness, and a service provider. And I heard that earlier today, which is the utility of the future, which, I think that's an interesting issue. We are kind of in this place of, do we want to be the utility of the future, or are we going to be customers of the future? And how can you be the customers of the future if you're not paired with an entity that enables you to do so? So what we've said all along is our utility, we want it to be as nimble as possible, meaning if we lock into owning generation, that reduces our flexibility. How can we think about maximizing that flexibility with short and long-term contracts, and being that facilitator where, in fact, we totally flip the model on its head, where, this issue of, customers that are defecting and doing more local generation are somehow going to harm the utility. Well, quite honestly, as long as we recover our fixed annual costs, which are actually about 30% in our modeling, then, gosh, we don't have to go out and procure the kind of power that we need to. So we can encourage customers to generate as much as they can, and we become that facilitator of a new business model that, again, allows entrepreneurs and local businesses that are working in this space to kind of maneuver in and be part of the system and offer services to customers. So in effect, we become the phone or the iPhone, and we allow the app developers to be active participants to help customers in their energy choices. So that's a bit of our model, and I didn't completely answer your question, and I apologize.
We'll go to Jamie, and then I want you guys to actually react and make some observations about what you're hearing. Okay, Jamie?
Well, I think we have an absolute obligation to find the lowest cost fuel sources and renewable energy sources for our customers. I think, to try and answer your question, I think there's been a lot of discussion about the ISO format or the IDSO concept or RTO concept, where we have this independent entity that's buying the cheapest, most reliable energy at that very moment. And I think if that type of system is put in, you have to balance the cost of putting in that type of system versus the benefits you're going to get from that energy trading market. I think going forward, though, if as a utility we can look at the real positive elements of that type of system and try and implement it ourselves in a very transparent manner, I think that we'll get a lot of faith and encouragement and confidence from our customers, knowing that we are making the best choices available to us. So I think, we didn't really talk, the ISO or RTO format wasn't discussed on this panel, but I just wanted to bring it up because it has been discussed quite heavily over the last few days. But there's a significant amount of cost that would be taken on to put in that type of system, especially in our territory. And to do it, just specific to Maui County, we'd have to do it across 3 islands. But I agree with Jonathan. If there is a way going forward that we can absolutely, create a new analytical lens to include local companies, to look at, sources of fuel. There's 36,000 acres coming online for new and exciting opportunities. I think that it's almost like a red flare going up, like, hey, there's a big opportunity here to start re-examining the whole situation that we have in our area, and can we start growing biofuels and make it economically feasible? I think it's time to take a look at it with a clean slate approach.
Okay. Jennifer?
I would just like to say, I've been thinking as you guys have been talking and thinking about my experiences over the last 7 or 8 years or so. I've been following MECO pretty closely and all of the energy happenings in the state. And about 7 years ago, there was very little renewable energy on the grid, and there was a lot of naysayers and a lot of people saying, "Oh, this is never going to happen," and how is MECO ever going to be able to move forward? And a lot of people complaining, and I've watched it over the years, and I've been quite honestly pretty impressed with how quickly it has moved forward, and I think that overall that they have been pretty progressive and moving forward, and it's not perfect, and I don't think that there is necessarily a perfect solution to all of this. And I think it's, I'm fascinated by the muni concept as well as the co-op concept, and I've talked to a lot of people at KIUC, and they've talked a lot about their issues and the challenges they've faced as well. So I guess I think that all of these models could potentially work, and one of them is happening right now. But how much is it going to hold us back from moving toward the future, and is it going to hold back the progress that's already been made? And when I talk to the people at MECO, Jamie and other people at MECO, individually everybody seems very committed to this goal and moving it forward, but there are a lot of challenges and a lot of things that have been put in place decades ago that have made it so challenging. So I don't know the answer, but I think it's good for us to learn about all of these different models and to really assess it from the systems approach and what would work best for our island community. And that's in line with our community values as well.
Doug, do you have some reflections you want to share with us right now?
Sure. Actually, I agree with Dr. Chirico here that why we're doing this is fundamentally important. I've heard more people talk about cost than I really expected, saying, cost is what's important. But, the reality today is we have a structure where the variable portion of our costs, we're just exposed to the oil price risk fundamentally. So if we can say that MECO is interested in lowering costs, and I appreciate they've had some good projects. But at the end of the day, without change, we are fully exposed to this really volatile commodity. And when you look at what MECO's proposed in terms of a pace to get to 100%, we got a long ways to go, and we will leave ourselves exposed for so long. So I guess, to me, even though we've talked so much about money, to me, the thought of price stability ought to be the selling point for change. Not necessarily that we're lowering your price from today's level to today's oil prices, but that we have, like KIUC, I think, has really, convinced the folks on Kauai that there's a plan here, and the plan is about getting control, spending the money on the capital side up front and not on the operational side. So I guess that is one thought. And the other thing I guess I'd like to talk about for a minute is just, in terms of an eminent domain kind of scenario. And I just say this as someone who's been a lawyer, as someone who's been in government, and someone who's had the pleasure of listening to these folks for a few years. There is not the political consensus on this island today to take on condemning MECO. I don't believe that exists yet. But it could. And so if you're going to do that, you have to have an idea, again, about why we're doing this, because the length of time, they're telling us, will extend beyond the term of our current mayor, it will extend beyond the term of our current council members, and frankly is going to require an ongoing commitment, like 5-7 years. So I don't believe we have that agreement today, but we might come up with it. And then I guess a final just thought is when we hear about creating an ISO out of the existing, Maui Electric, my concern is that when you think about the stranded cost issue, we're talking essentially about a surgery where I'm really worried if the patient's going to survive. That is my concern at the end of the day. If you try to just carve out that piece, given what we have on stranded costs, is that really a viable entity you're leaving? And so, those are really, I guess, my thoughts, just trying to listen to folks. And, there's a lot to like about the co-op model, and I think it does fit with a lot of what people want. And I guess maybe we'll have that groundswell here on Maui. But I think, Marcos and Richard both, are proof that they've had that on Big Island, and maybe it will happen here. So with that, I am going to be quiet for a little bit.
Kelly?
Thank you. Actually, I'm really glad that Doug went before me, because I had some thoughts on, and I agree with the price stability issue, because I think there's a value in, even if it's a higher price, in knowing and being able to budget. But I think talking about the goals of why we would do this is really important, because I hear a lot of fear about losing control, and with the merger is a big part of it, is having our state, as a whole, losing the control of our utility from within the state to someplace, on the mainland. And if we could flesh out what really is the concern of the community, why the community might do something, and I think your model is so valuable for doing that, bringing people together that are willing to put the time in to have these meetings and find out what it is that people are really concerned about. Are they concerned about cost first, or are they concerned about renewables, or are they concerned about stability, control, and those things? It might be a combination of all, but I don't think there's been that effort on Maui yet to bring people together to say really what are their concerns. We know the administration is kind of working in a vacuum on what their concerns are. There are a few people that have concerns on the ground level, and then some people who have energy concerns that because they haven't seen a real big push on this island pushing for renewables, but no one's brought together the group of stakeholders we need to bring together to really have that. So even if it starts out as something like the co-op effort, or even municipality, and then morphs into something else, because I really believe that what we're looking at, what would fit our needs the best, is going to be some kind of a combination of things, because of being tri-isle, because of, I think Maui has a different type of business business climate here than the Big Island. To me, is kind of like the two islands, but you're all on one piece of land, so it kind of makes it easier that way. We have an island, Lanai, that's totally the 90% owned by somebody else, so we would have to deal with that person. And then we have a uniqueness on Molokai that, nothing that's non-native can come there, basically. And then we have the business community on Maui. And I've never seen an effort really to bring all the stakeholders together, but I do think that if anything started like either the municipality efforts or the co-op efforts, that would at least get the conversation started, and and working with the utility as it exists now to try to figure out what it is that people, what are our concerns? Why would we change? and then try to come to some conclusions together, because this is a very fragmented discussion on our island right now. So that was one of the things I think was really good about this, is like bringing some of this together. I would really love, do we have time for the audience to
Yeah,
make
we got
comment?
about 5 minutes, actually. So we'd like to open up for questions, if anybody has any questions of the panelists at this point. We've got about 5 minutes. Now we have 4. No.
Thank you, Drew Bradley. This one's directed Marco and Jonathan. A little bit different scenario from what I've heard, where, Marco, you're saying that you need a willing seller. And I think Jonathan said that it's going to happen by eminent domain or other. How do you intend to get a willing seller when there's such a vested interest in ownership and a lot of marbles on the table and an acquisition? How is that going to happen?
A great question, Drew. Thank you for asking it. I was kind of brought up Catholic. I'm not really Catholic now, but Catholics are big into lighting candles at church for prayers. So that probably doesn't go too far in terms of finding a willing seller. Now, what we've done. What HIEC has done is essentially established and maintained very friendly and cordial relations with some of the folks at HEI and Hawaiian Electric. Just kind of full disclosure, my company, Provision Solar, we actually used to be owned by HEI long ago, and when I moved here in 2000, I was working for Provision Technologies, and we were a wholly owned subsidiary of HEI. So I bought the company in 2003, but over the past 16 years, I've maintained friendly contacts with folks at HECO, HELCO, and MECO. So we've essentially, I think, positioned ourselves that if and when, depending on how this merger deal shakes out, and I think we'll know a lot more in the next several months, that we've made clear that we're knocking at the door if there happens to be someone behind the door who might be interested in possibly selling Hawaii Electric Light Company to a co-op.
So I'll just take a quick response to that and say, in the last 30 years, there's been roughly 20 municipalizations. Roughly 12 of those have resulted in negotiated settlements. 8 have gone through the condemnation process, and only a handful of those have been successful. So it is hard, no doubt about it. It's time-consuming, it's expensive, but in the end, at least I'll speak from my community's perspective, it provides maximum control, maximum ability to impact our or at least to implement our vision as a community. There's been a lot of talk about, why don't we go towards community choice aggregation or something short of municipalization. The problem is that those aren't allowed in the state of Colorado. So we're kind of forced into this place of you either municipalize or you get what you get with a homogenized system. So it is challenging. And I guess while I have the mic, I just wanted to respond to Kelly, something you said about kind of this fragmented conversation. I will just say, as my last remark, I'm really honored to be part of this conversation. You all should be incredibly proud you're all here having this conversation, because it is remarkably refreshing to have everyone sitting around and saying, we have a shared vision. We just have to figure out the best way to get there. And it is so refreshing, and know that you are envied by the rest of us on the mainland who are still struggling with the business models that we have. So I thank you for that.
Unfortunately, we're out of time. Sure. So I know, but if, okay, why don't we just take one more question and I'll get
It's not even a question. It's just a recommendation. I would like to see MEDB organize a group of people to get together to carry on this discussion in the community, whether it be the Guernsey report, consumers of electricity, whether they be corporate or personal, to begin looking at these models, get the numbers so that we can actually go forward. Because just going home tonight and not having the ability to continue this discussion, I think would be unfortunate. Thank you.
Okay, well, thank you. Thank you for that comment. Okay, I think I'd like to give a big hand to our panel. I mean, we've discussed a lot. My head is swimming with a lot of questions. I think we could have gone for a long time more here because there's a lot of input here. But I really want to thank the panel today. You guys done a great job. I think this is a dialogue that should continue as well. So that's it for us, and please stay for the closing. We've got some Tina and Jeannie will be coming out and giving us some closing remarks, and we're going to exit stage left, as the cartoon says.
Okay, good.